Good afternoon, everyone. My name is Sriram from the Commodity Market Desk at Reliance Securities. Welcome to the weekly commodity market updates. So, beginning with the bullion side of things, as usual, international spot and domestic bullion prices gave up gains last week to end on the red. It was all about the jobs number last week, and it did not disappoint the dollar bulls. The jobs report appears to fall mildly in the camp of US monetary policy hawks who want the Fed to continue to increase the interest rate cycle, and this weighed on sentiments. US equity markets also gained last week, and this too weighed on the bullion side of things amid a broad profit taking from the investors after the recent peaks. Reflecting the current sentiment in the market, data from CFTC showed that COMEX gold speculators lowered their net long positions ahead of that Fed meeting this week by almost by 12,000 contracts in the week ending December 5th, suggesting more possibility of more weakness going forward. We feel that the key trigger will be the FOMC meeting. Again, other central banks are also scheduled for their meet, but the main trigger could come from the FOMC interest rate decision. Of course, ECB and the Bank of England are also scheduled to meet, and both banks are expected to hold interest rates unchanged this week. The Fed, along with the Fed monetary policy statement, the economic projections will be released by the Federal Reserve, including the interest rate forecast, also known as the dot plot projections, and that will be a key trigger for the bullion markets in the coming week or so. Last time in September, the market saw only 2 rate cuts in 2024, but recent data of easing, especially on the inflation side, which has eased significantly over the past few weeks, market is predicting possibly a 4 rate hikes in 2024, but it will depend on what the FOMC says. So a 4 rate hike is slightly bearish for the dollar index and slightly bullish for the bullion. Any projections less than 4 could be a negative trigger for the bullion going forward in the coming week or so. Of course, investors will also be anxious to see if there is a shift of statement by the ECB and the Bank of England as well, after recent numbers there also have on the inflation side especially have eased significantly. So a very important couple of days, and that will move the markets over the next 1 week or so. On the charts, key support for COMEX gold February futures is at 1980, and a break below will pull prices to 1935 levels. On the upside, key hurdles are at 2020 and 2045 levels in this week. On the domestic side, we see a key support at 60,700, and a break below will pull prices to 60,400. On the upside, key hurdles are at 61,500 and 62,000 for the markets. Moving on to energy, international and domestic oil prices tumbled last week on lingering oversupply and weak demand concerns. Fueling weakness for oil was weak demand from top importer China, as weak economic numbers and slowing orders from independent refiners weakened the demand for the oil side of things. Additionally, gasoline demand in the US also lagged the 10-year seasonal average by about 2.5% on weight on the crude oil side of things last week. On the gas side, we saw markets tumbling week on week after long-term weather forecast called for milder weather in the whole of December. Looking ahead in the coming week or so, we see oil prices, starting with the oil side, we see oil could continue to struggle despite rising geopolitical tensions in the Middle East and falling inventories. The latest data from API showed that inventories dropped by almost 2.5 million barrels. But signs of ample supply and persistent weak demand, global demand, could continue to cap any meaningful upside for oil prices. This week, the key triggers will be the OPEC monthly report and the IEA monthly report, along with the EIA inventory numbers this week. Traders will also look out for any major changes in the FOMC projections from the Fed meeting outcome this week as well. So markets could continue to remain extremely volatile going forward. On the charts, key supports are at for NYMEX are at 67.50, and a break below will pull prices all the way down to 64. On the upside, we feel key hurdles are at $72 and $75 for the NYMEX crude oil this week. On the domestic side, supports are at 57.15 and 55.60, and on the upside we feel the range key hurdle are at 59.5955 and 6130 for the domestic futures, January futures going forward. On the gas side, we feel gas could continue to weaken further this week and in the coming few weeks, as well as milder weather in December could continue to weaken demand. The milder weather could also allow the utilities to leave more gas in storage, which could lead to more supply in the markets and in turn weigh on sentiment. So we see more correction for the gas prices going forward. Domestically, we see a broad range of 175 on the lower side to 215 on the upside of things. Finally, on the base metal side, starting with copper tumbled last week as the dollar strengthened with further pressure coming from increasing stocks in LME warehouses and resurfacing doubts over the Chinese demand prospects. Stocks and LME rose to 1,74,900 tons, which are almost up by 200% from the levels of July. Of course, other weakened demand from China. Recent numbers have remained slightly sluggish from the top importer of the red metal, and that continued to keep up any meaningful upside limited. Among other metals, more aluminium and zinc were also slightly on the weaker side of things, tracking the strength of the dollar in the previous week. Additionally, prices were also impacted by Moody's cut its outlook in China credit ratings to negative from stable, citing global concerns of the impact of the surging local Chinese government debt, and that could continue to keep any meaningful upside limited for the base metals. Looking ahead, copper can remain range bound. Upside could be capped amid lack of any fresh stimulus from China, but traders will seek direction from the FOMC meeting and data points. The key data like new loans, new Chinese loans, new yuan loans will be very key trigger, and total social financing will also be a key trigger for the base metal sector, and that will move the markets this week. On the charts, MCX copper could trade between 705, 707 on the lower side to 725, 727 on the upside of things. So that's it from our side. Thank you very much for watching. Have a pleasant day ahead. Thank you.